I'm Anthony Georgiadis, General Partner at Innovating Capital, and you're watching Taking Stock.
Let's do it, folks. Welcome to the show. 2 minutes to go here until the close for the final trading Monday of the year 2025. A fair bit of profit taking off the top for the tail of the tape on this Monday. What's the date? December 29th, a few days ahead of New Year's Eve. The markets are in negative territory for this day. And for any market participant or market observer wondering the state of the so-called Santa Claus rally, well, the close of last Tuesday, December 23rd, for the S&P 500 was 69.0978. Looks like we are about 5 points shy, which means at least as of right now, one and all, don't be too concerned. Santa Claus has not yet come to town here on Wall Street. The risk-off trade is alive and well and is, in fact, our tail of the tape for the show today. Energy, utilities, and real estate, those are the strongest performing sectors in the S&P today, with losses to the downside being led by discretionary, materials, and technology stocks. Welcome to the broadcast. You're watching Taking Stock. I'm your host, JD Durkin. Mere moments away, my friends, from the ringing of the iconic closing bell on the final trading Monday here on Wall Street. The amazing team from Norex, ticker symbol KNRX, set to do the honors in just a bit. On the broadcast today, we'll talk a lot more about the state of precious and industrial metals, a wild reversal on the day for both gold and silver. Oil benchmarks are in positive territory. The crypto majors are in mixed territory, with Bitcoin trading back down to an 87 handle. Our good friend Andy Baer will join us later on in the show to get his take on what all this means for the state of the crypto industry as we head into the new year. But first, time now for our favorite daily tradition, the ringing of the closing bell at the big board. And on this final trading Monday of the year 2025, your final tail of the tape, rather, a fair bit of profit taking for investors across the major market indexes. Final scorecard, the S&P 500 will finish down 0.3%. The Dow 30 components will fall 0.5%. The NYSE Composite Index down, let's call it 0.4, and the small caps down 0.6%. Let's say hello to our good friend Gregory Farinello. He is the head of U.S. rates at Amerivet Securities for his take on today's price action. And happy holidays.
JD, thank you for having me.
Unfortunately, you and I are both wearing our red ties for all the red on the big board today, but we look up today, it's way lighter volume. End of year window dressing, some profit taking, some tax loss harvesting, all these wonky things going on in the markets. But Gregory, as you look up, what do you see happen across the markets today?
2026 is going to be a great year. That's my view.
Okay.
2025 was a great year. 2026 is going to be a great year as well. So what you're seeing here late in the year is just what you said. It's harvesting, right? And when I look forward, when I look at policy, when I look at the economy, when I look at interest rates right now, I see a very, very good year ahead of us in 2026.
What are some of those key catalysts for 2026 most on your radar? A lot of people talking about some fresh fiscal stimulus to kick off the year from the reconciliation bill. You got a more dovish, presumably, a more dovish FOMC. What else are you tracking?
Well, you know, the FOMC, I mean, rates, we still believe rates will come down here a little bit. It may not be as much as investors want, but we're 50, 75 basis points. I think rates could certainly come down lower. We're going to have a change in the FOMC in terms of policy. But when you look at the policies that have been put in place in 2025, they haven't kicked in yet. So they're going to kick in 2026. And I think it's going to be a very good year for markets.
And Gregory, I wonder what that means for some of the hedge trades. I mean, the run-up that we've had in precious and industrial metals, what a story. Obviously, we had a big reversal for the session for gold and silver today, but if we had this conversation yesterday, it would still be a continuing narrative of all-time highs. How did that happen?
I'm not buying gold up here. I'm not. I'm sorry. I'm not. I mean, look, it's been a good run-up. I think this will be a different year. Gold has had a fantastic run. I'm not buying it up here for sure. But I think when you look at the broader markets, we are broadening out in markets in general. And that's because the economy in the U.S. is doing extremely well. And we're going to see that growth, I think, to start 2026.
One thing we are looking for, and it could happen any day now, presumably after the new year, is going to be the highly anticipated Supreme Court decision about tariff policy out of the White House. There could be big implications because we don't really know exactly how even many of the conservative justices are going to roll on this. What should market participants be paying attention to as we presumably inch closer to a Supreme Court decision?
Well, I think the president in general he hasn't backed away from tariff policy, but he has shown an open mindset to tariff policy. And whether that's abroad, whether that's down south, he has shown an open mindset in terms of what tariff policy means in general. So I'm not concerned about tariff policy in general. With regard to the deficit and what tariff policy means with regard to that, we need growth in this country. At the end of the day, we actually need a little inflation too to get this deficit down. But this president, I think, has shown a very open mindset in terms of what he's tried to invoke in 2025 and what's going to come in 2026, and I think markets really, really like it.
Gregory Farinello is the head of U.S. rates at AmeriVet Securities. Thanks for coming by once again to the big board. Always great to have you. Happy New Year to you, brother.
Happy New Year.
We'll have you back again soon. I'm going to actually grab your microphone, and Jeff, you and I are going to head for a walk this way. Excuse me, folks, as we come through. Time now to talk about one of my favorite trading indicators. You've heard of the Santa Claus rally. How about the January barometer? It gets talked a little bit about, a lot less so. First devised by economist Yale Hirsch back in 1972. It basically says as the S&P, oh, thank you, Jeff, as the S&P 500 goes for the month of January, so too go the markets. It's got 84% accuracy going all the way back to 1950. We do have some outliers, certainly since 1950, 12 of them to be exact. The outbreak of the Vietnam War, the aftermath of 9/11, the outbreak of the COVID pandemic throws off the January barometer, but oftentimes a midterm election cycle throws off those historical indicators, but still has almost a 60% support rate that ends up coming true. So we'll watch closely to see how investors carry through the January barometer as we kick off trading for the new year on Friday. Jeff, before we toss a break, we'll take a look at two NYSE notables here on the day. First up, CMG, that is Chipotle, ending 2025 on a continued weak note. The stock is down 38% from the start of the year. Chipotle has missed revenue estimates for 5 consecutive quarters here on Wall Street. Still has an average one-year price target of $43 a share. That suggests additional upside potential of about 15%. And finally, before we take a look to break, how about the House of Mouse? Disney shares up about 0.5%, a nice ride as of late. Shares of Disney are up 12% from the lows of the Thanksgiving week. It did hit a technical death cross, if you follow that sort of thing. When the 50-day moving average slips underneath the 200-day moving average, it hit its technical death cross back on December 9th, but it has had a nice rally the last month or so. Shares of Disney are up 2% from the start of 2025. At this point of the broadcast, we bring you a really exciting interview out of Riyadh. That's where FinTech TV's very own Vince Molinari sat down with His Excellency Majid Al Hogail. He is the Minister of Municipalities and Housing for the Kingdom of Saudi Arabia. Take a look.
I'm incredibly honored to be with His Excellency Majid Al Hogail, Minister of Municipality and Housing. Your Excellency, welcome to the show.
Thank you. Thank you for hosting me today with you.
Well, we are so delighted to bring forward the stories of what's occurring here in Saudi Arabia to our broader audience around the world and back to the New York Stock Exchange. And I'd like to ask a couple of questions, if I may.
Please do.
How will real estate solutions help citizens and investors take advantage of new opportunities in the real estate market?
Saudi Arabia is really living in a very fast transformation. Part of this is the quality life, and within the quality life, the home and the community, work and live, 5-minute city, 15-minute cities. All that is being incorporated in Saudi Arabia. and we now seen a lot of local developer are doing amazing projects to take this vision to a reality. And whereas we seen a citizen, local, we seen expats, we seen investors, we seen international people joining this opportunities.
Well, it's been really incredible for us to witness it this week, to see the manifestation of Vision 2030 and everything from the diversity to the sustainability all coming together. Congratulations to you and the entire team for what you're advancing.
Thank you.
Uh, how will real estate fintech solutions contribute to accelerating project implementation and attracting investors?
One of the most advanced in Saudi Arabia is the e-government. This e-government enable us with extremely amazing data. What people need, what investors need, what other needs. Today we are in the second step where we need to enable this to AI and fintech and other proptech technologies are being now implemented to help decision maker as an investors, home buyer, renter, operator, facility management. Within the scheme, we are enabling all the stakeholder to start to use the technology, the AI, to improve their efficiency, ability to create the product, to engage with the people at the most advanced technologies.
But it's been really incredible as we see that all unfolding in the many of the conversations that we've been having here this week. Uh, if I may, His Excellency, what is the impact of real estate and new standards on prop tech companies, especially startups developing digital solutions for the market?
When we study tokenization in real estate, we noticed that no country have started standardization of the real estate token. So we said before we move ahead, let's first standardize this through a government, not the private sector, to make sure that the governance and to protect all stakeholders have to be started from government. So our real estate general authority has been now established this criteria to enable all the proptechs, all the companies, all stakeholder to engage with that. So we are now standardization, the traditional, we call it sukuk, which is the ownership deed or title deeds, to a digital platform where we could have fractional of it, full of it, and what we need is to have it before the execution, not after the execution.
So very much looking forward to hearing more and very honored for you joining us today on FinTech TV.
Thank you. Thank you.
Thank you.
Thanks a lot.
Welcome back to the show. You're watching Taking Stock live from the big board here in New York City. Time now for the latest headlines in the worlds of fintech, crypto, and artificial intelligence you need for this, the final trading Monday of 2025. First up, the crypto majors, kind of a mixed position here. We do have Bitcoin selling off 0.8%, ETH down 0.7, Solana is up 0.7. Bitcoin currently trading right about 87,163. Next up at this hour, Coinbase CEO Brian Armstrong says U.S. banks will eventually flip their position on stablecoins and lobby for the right to pay interest. This as traditional banks face growing competition from digital competitors. And all this comes, finally, as China is shifting its digital yuan strategy, allowing banks to pay interest on electronic holdings next year. This in a bid to boost adoption and turn the CBDC from digital cash into a digital deposit. Time now to welcome one of absolutely my favorite guests in the world of crypto meets Wall Street. Say hello to the great Andy Bayer, head of product and research at CoinDesk Indices. My man, thanks for being here as always.
It's great to be here, and it's great to be waving this past quarter goodbye, right? And heading into a new optimistic quarter for 2026.
What happens this last quarter? I mean, you and I have talked many times over the last few months, but now that we are basically in the final days of the year, as you look back, what has been going on?
The important stuff has been going great, right? You couldn't ask for any more. You have even the news that you were talking about, all the announcements Coinbase made, all the M&A, all the advancements with stable coins, all the integrations, Visa, MasterCard, payments. The abstraction, whereas people will be able to use blockchain without even thinking of it, is advancing very quickly. The plumbing of Wall Street, DTCC, all of this is happening, and banks are getting involved on the settlement side, even if not on the yield on stablecoin side yet. So all that slow money stuff is happening great, M&A great. The markets have been another story.
What are we to make of the fact that we have had that other story, i.e. all this selling pressure we've had? I mean, Bitcoin was at 126 not that long ago. Now we're down to 87. At the same time, that we're having the very same conversation about institutional adoption.
It's weird, and it's just how markets work, right? Bitcoin has even lost some ground to gold and to silver lately on the debasement trade, kind of fast money. The alts have sort of lost the script when it comes to all the innovation that's happening. We had this event back in October, which pulled a lot of liquidity out of the market, and created a little bit of fear. And volumes have gone down since then. This is just markets. Look, from my observations, the crypto market seems to have an attention span of about a quarter. So whatever happens in a quarter, if a trend's lasting a quarter, it's a good time to check in. Our trend indicators have been in downtrend since mid-October. But this quarter is ending. We're going to start afresh, and we'll see what happens from there. This too shall pass.
This too shall pass. I love that. Maybe that's welcome news and guidance in the eyes and ears of many investors out there. Talk to me a bit more about what the data at CoinDesk Indices is telling you right now. It could be on the retail side or interesting standouts as we round out the year.
We need volumes to increase. We want to see where that fast money is going to go. Remember that 2/3 to 3/4 of all crypto trading around the world is in derivatives, in perps and in futures and in options. There'll be some new futures arriving in the United States in Q1. So we'll see what kind of momentum that brings with institutional investors. Right now, the most positive and strong moments that we had in 2025 were when ETH led this rally, which brought more breadth into the market, brought other layer ones with it, brought the whole CoinDesk 20 to accelerate in performance past Bitcoin, and that was a good moment. We think ETH is the key to be kind of the quarterback of the next rally, just as it was in 2025, especially with its linkages to DeFi and stablecoins and tokenization. Solana, of course, will be important, other layer ones, other infrastructure plays, but you can't have a rally without ETH, so we're going to look for ETH to help lead the way.
Before I let you go, your final outlook, your guidance, your best sense on what we should be paying attention to a little bit more in the world of the crypto majors or general blockchain conversation for the new year.
We just got to be patient, but with all the progress that we've made this year and all the regulatory progress that can be made early in the next year, stay tuned, be broad, don't try to time the market, don't try to pick individual names, buy an index product, and look forward.
Time in the market, not timing the markets, as we like to say here on Wall Street. That's true for equities, crypto, and beyond. The great Andy Baer of CoinDesk Indices. Happy New Year to you. Thanks for joining us.
Happy New Year.
We'll do it again soon after the new year. Folks, don't go anywhere. Much more Taking Stock coming up live from the New York Stock Exchange right after this. Welcome back to the show. Because it's the week of holidays, we get to bring you our favorite interviews we have done here on Taking Stock so far here in 2025. And back in November, Jon Gray and Stephen Schwarzman of Blackstone stopped by the hallowed corridors of the New York Stock Exchange in celebration of 40 years as a firm. Take a look. Steve Schwarzman and Jon Gray of Blackstone join us now down here on the trading floor of the New York Stock Exchange shortly after ringing the iconic closing bell here at the NYSE. John, Steve, it's great to have both you gentlemen.
Well, it's great to be here.
Of course.
That was a special moment. We're celebrating our 40th, and to do it here at the New York Stock Exchange, nothing could be better.
Steve, 40 years into Blackstone. Talk to me about the ongoing Blackstone playbook, and what does success look like for you and the firm 4 decades in?
Well, the playbook's been working now for 40 years. It involves defining objectives of trying to be the best in the world at whatever we choose to do, to have great people, to have nice people, to be looking for paradigm shifts in the environment so we can enter new areas and new places in the world with those new areas to create great returns for our customers, for our limited partners, for our retail customers. And this playbook has a long way to go.
John, without a doubt, part of that playbook, the state of private credit. You now manage over $500 billion in credit. Why do you see private credit as really being so opportune to the moment we're in today?
Well, private credit's really about bringing investors right up to borrowers. If you think about, traditionally there was a lot of cost, origination, securitization costs. What this does is allow investors to get higher returns without taking on incremental risk. And you can do it for investment grade companies, non-investment grade. It really helps bring more credit to the system. It's good for consumers. It's good for the health of the overall financial system. And it's really good for the people we manage capital for. So we think this is an area that will continue to grow in a really big way.
Steve, talk to me about the core values behind the brand 40 years later. In what ways have any of those core values evolved? And in what ways have those core values, so important to the work at Blackstone, maintained the same?
Well, for any organization that really does well over time, there has to be a set of core values, and that involves merit, decisions, honesty, integrity, hard work, no glass ceilings, cooperation among the people, no internal politics. And if you stick to those types of values, of hard work, want to win, do it ethically, always see an opportunity, always be looking, never be totally secure in what you're doing, because finance is an industry where nothing stays the same and where there aren't great moats for most businesses. So you always have to be inventing new things. And a firm that has a culture that understands that loves doing new things and doing them the highest standard and making sure you never lose money and your customer is always first. So if you keep that in mind, and everyone at the firm does, then you can prosper over the long term.
That's awesome. I love that response.
By the way, I would just say that when you think about the DNA of Blackstone, this is the DNA of Blackstone. His drive, his will to win, his passion, his care for the customers, the idea that we should always operate at the highest standard, be excellent at what we do, that's what powers the firm. We had our big BXTV celebration this morning, talking with everybody, and we talked about what Steve has put inside of the firm, and still does every day. He puts this electricity through the building, and it's the reason why our firm is such a special place. It's the reason why when I look forward, think about the next 40 years, I have a lot of confidence in Blackstone. This is the man who deserves the credit.
I'm almost out of time with you, gentlemen, but John, before I let you go, I would not be doing my job in 2025 without asking you something about how you're approaching the general artificial intelligence conversation. What does AI look like within Blackstone, and your expectations as that tech continues to evolve?
Well, I would say on AI, it's fundamentally transformative. This is not some passing fad. It is not a bubble. There'll be excesses, but business is going to be transformed. there's going to be this huge investment boom in chips and data centers and power, and it's going to lead to a massive productivity boom. We're trying to take advantage of it by investing in the picks and shovels, the data centers, the power, but also investing in some of the great software companies that are out there, and then also thinking about how we can transform our businesses. If we do all of that, we'll deliver for our customers. The reason the firm has had so much success for 40 years is because we focused on our customers delivering returns. As we move into this AI world, it's no different. Another reason I have a ton of optimism.
Steve Schwartzman, John Gray, congratulations on the last 40 years, gentlemen. Many wishes for success for you and the firm for another 40. Thanks a lot for being down here at the New York Stock Exchange. Great to have both of you.
Thanks. Great to talk with you.
Of course. Thank you, gentlemen. Really appreciate it. Folks, don't go anywhere. Much more Taking Stock coming up live from the NYSE trading floor after this quick break. 5 seconds.
I'm Scarlett Sieber from Money 2020, and welcome back to Hindsight 2020, where tiny things make trillion-dollar waves. Today we're heading to December 23rd, 1947. Bell Labs scientists unveiled the transistor, a little piece of tech that basically said, move over vacuum tubes, we're going lean. It was the ultimate glow-up. Why does this matter? Because a transistor is the building block of modern electronics. No transistor, no iPhone, no Venmo, no TikTok, no crypto. This was the OG tech startup moment. 3 scientists in a lab creating something that would power everything, from laptops to AI. Fast forward, the transistor shrinks computers from room-sized beasts to pocket-sized powerhouses. It launches Silicon Valley. It makes fintech possible. It turns the digital economy from buzzword to reality. So yeah, December 23rd wasn't just about holiday shopping or my dad's birthday. It was the day tech got its first unicorn. Transistor, thank you for your contribution to our economy and to the world of fintech. Back over to you.
Tomorrow here on Wall Street, the S&P Case-Shiller Home Price Index crosses the wires, as well as the December FOMC minutes. That's going to do it for this edition of Taking Stock. Have a great night, and we will see you tomorrow. Woo!